Is your portfolio red? Are you down 50, 60, 70% on your altcoins and your favorite memes and your cock inus and balls? Have you called your mom and told, I've lost a lot of money and I need to move back into the bunker? Well, you can call her back and tell her, Mom, I just watched Farsh's new video and I don't need to move back in anymore. And I'm bullish again and I'm about to make a lot of filthy, disgusting money this bull run. And in fact, I'm here to tell you and hopefully convince you by the end of this video that not only I'm not bearish, that we're about to experience one of the biggest, baddest bull runs of our lifetime. So without further ado, let's jump right into this video. Today, I'd like to just speak about, make a short video on where I think Bitcoin is and what phase of the market we're in and where I think the price is going to basically be heading and my anticipation for the market and where I'm looking to basically add to my positions for the rest of the bull run if I do think there is more to the bull run, or do I think, this is all over and it's all doom and gloom and we're headed to zero. Basically, that's the plan for today. So let's just get right into it, straight to the chart. So basically, we're looking at Bitcoin price on the weekly time frame at the moment. These green boxes that you can see are actually an indicator called Lux Algo fair value gaps, which I will talk about fair value gaps at some point because it's something that I'm seeing in the price action currently, and I'll explain to you what fair value gaps are, so don't stress out if you're new. And something else I'd like to speak about is the good old Bitcoin halving, the big meme of the market, currently exactly 2 days away. And we'll start with that first. Actually, there's an indicator called BTC halving rainbow plus S2F. This is something I like to look at when I always look at the halving, because it kind of very nicely visualizes and color codes the phases of Bitcoin from halving to halving. If you have a look at it here, Bitcoin starts off at the halving in a blue color, and the blue slowly turns into green, as it has that parabolic exponential growth to the top of the, to the top of the bull run. That green slowly turns into yellow through distribution at the top of the cycle, and then that turns into a crash into a yellow color. That yellow color at the bottom of the bear market slowly turns into accumulation and turns into orange, back into that pre-halving blow off top, not a blow off top, but the run up. That orange turns into red, and there you go. That's where we're at the moment, and we're basically about to repeat that cycle. So that's where we're at right now. I think next is obviously that red is going to turn into blue. That halving is actually incorrect. It's not going to be 14th of April. It's going to be 20th of April in 2 days, as we had a look at it here. This is not always accurate. It's an ETA, it's an estimated time. Looking at the previous basically halvings, there's always been that pre-halving crash. So that's where I believe we're at the moment. I think this is normal to, if you look at the 2016 halving, we did drop. We actually went all the way down to, we had a 40% drop here, before that was a generational buying zone, and then we went up. Here, obviously, that was the Rona dump, so a bit of a black swan event. But even without that, if you just go to the bottom of this run here and just ignore the, the Rona dump, this was a 53%, crash. So that's not too crazy to think that that's going to happen here as well. So far, if you look at how much we've dropped from the top, we've actually 20% so far. So I wouldn't be surprised for us to drop a bit further. So, that's where we're at the moment. I think, this is kind of healthy as well, because how quickly and how fast we went up to the previous all-time high. So this is normal. We haven't really had a proper pullback since August last year. So this is normal. If you want that long, healthy bull run and we don't want a left transcended cycle, it's very important that we actually, come back down, reset a lot of the technical indicators. If we go to CoinMarketCap right now, we can see that fear grid index is finally reset to neutral zone. We've been at grid and extreme grid for, I believe, months, since January, if I'm correct. Yeah, we've been in the extreme to grid to extreme grid basically all the way since, this is February. We had a little bit of down when we hit that $38,000, but we've been in these higher levels for a while. So this is the first time we've actually come back down to that neutral zone. This is healthy. I think we also probably reset the funding rates and the open interest, hopefully.
It's climbed back up pretty quickly, but that's normal. Yeah, so this is not a bad thing. I actually like seeing a lot of these indicators resetting. The next thing I wanted to talk about is, so in ICT, if for those who don't know, in ICT concepts, you can search it on YouTube. He's a goddaddy of a lot of these smart money concepts. And something he has, one of his concepts is called a fair value gap. And what a fair value gap is, basically when you have a big body candle that creates a displacement like here, right? And the candle creates a gap between the high of the previous candle and the low of the next candle. This is in a bullish scenario. This box here, that is called the fair value gap. Usually it's a point of interest, a place of interest. And if you want to just use an indicator that shows it to you, you can use Lux algos. If you're good at actually recognizing it, you can just recognize it here. I will put just a box from here to here, which I've already done actually, so I don't need to do that. So what I think is happening now is, if you look at this price action we had here at the this candle that took us from the high 30s to $40,000 levels, we created a fair value gap here, and you can see when we went back down and we created this local top, we actually, price kind of likes to go back to these areas and confirm them as a support, or if it's bearish, it will invert it into a resistance point. So, you know, maybe a couple of closures underneath this section. I like to see 3 consecutive closes to be sure, but even not, if not, that is probably sometimes a good indication that, you know, market is weak. It's a bearish scenario. We're close below it, maybe do a, you know, break and retest and then go down. In a bearish scenario, in a bullish scenario, like in this instance, we kind of go down, we touch the bottom of it. We never close even inside it in this scenario. Very strong. This is right into the BTC halving. ETFs getting approved. And, you know, we went on an amazing run from, you know, $38,000 to the $70,000 range. We did that here as well in August last year. You can see we created this big body candle displacement. This is a fair value gap. You can see we broke above it. We kind of come back down into the equilibrium side, into this golden pocket between the 618 and the 0.5, and then we go up again, come in there, and then we now confirmed it as support. We don't have to always do 2 pullbacks, but in this instance we did, and then we went up from there. So these are usually really good buying opportunities, because especially if you're trading, you can actually buy here, put your stop loss at the bottom of the fair value gap, and you will be minimizing your potential downside risk. We did that here as well. Another fair value gap, you can see created here. We go up, we come back into it, and then we're up and above we go. And you can use these concepts to create your own hypothesis going forward. And what I think is happening here is, I think we've come down, but I think we're gonna go further down, in my opinion. And where I think we might be going now is potentially to that golden pocket, is where I'm looking at, between 55 and 56. We could go all the way down to the bottom of it, or we don't even have to do that. We could potentially do what we did here and not even reach that. So as long as that happens, I'm still very, very bullish, and I see all of this as a very healthy pullback, and I wouldn't stress out it. And if you guys have, especially if you're in high conviction bags, I know altcoins have absolutely gotten demolished in this time. If you're in high conviction bags, I wouldn't panic, just hold tight. These are where the massive gains are made by staying, especially if you're new to crypto. These pullbacks can be very scary, I know, because I've been through it. So if you're new, just make sure you stay strong and just hold your bags. If you're very stressed and you can't sleep at night, you're probably overexposed, and I would say you need to de-risk yourself just so you can sleep well at night. But if you're a degen like me, you're not here to sleep well. The other thing I want to talk about, besides the fair value gaps that I was talking about, I'm not a huge Elliott wave guru, but I can't help but see one wave here, a second wave down, a big third wave, and I'm thinking that that's where we're about to create that 4th wave of the Elliott wave. And, you know, putting that in together with my other hypothesis from fair value gaps and smart money concepts, I think maybe that 4th wave can come down to mid $50,000 levels. This is just a hypothesis. We could come down to the lower $50,000 levels, still healthy. As long as we don't close below this fair value gap, I'm very, very bullish. I think that's probably a good place to leave it off. If you've enjoyed this video, please like, share, subscribe, and all the good stuff. I would appreciate that. I will come up with another video later on with just talking about the altcoins and other conviction bags that I have, and I might even make some specific videos in different narratives, AI, gaming, and some of the meme coins I'm in, and kind of break them down so it's all digestible instead of making it all in one big video that no one's gonna watch. So I appreciate you guys being here till the end, and I'll see you guys in the next video.